Hello, and welcome back. Today, I'm going to be discussing about the day trading system and how it can enhance my overnight system. It's a pretty cool system. I mean, they're not too blazing hot, but together combined, they will be generating very nice returns. Keep in mind, this is the backtesting results. So, I'm not a financial advisor. I want to give you a disclaimer. Just make sure you do your own due diligence before you trade what I'm showing you. But these are legitimate systems still, so let me dive in. Okay, here's the idea. The idea that I have, okay, how can I improve the returns for my overnight system? I did a video, I think last month, about the momentum system on the Russell 1000, and it was a short-term trend following momentum system, so by itself it was not blazing hot. I mean, it was cool, but not blazing hot. So how can I improve it? Well, one thing is like this is the trend following, the short-term trend following system, and if you want to know how to get this system going, as you can see, it actually made a lot of money lately. But you can take a look at the video early in my video course, not courses, but in all the videos that I'm posting. So make sure to go over there and check it out. But as you can see, it generates right now, as of today, 12% returns on average, compounded returns, and 34% drawdowns. So, can I enhance it? Can I get a little bit more? Because trading it by itself is not as easy as you can see, because the win rate is only 43%. So, pretty much more than half of my trades would fail, even though it still generates pretty interesting returns. Okay, so let me show you a little bit more. So, what can we do? Well, that's why the idea was born. It's like, how about I will have the day trading system? And a lot of people don't know that yes, you can have day trading systems which are working from end of day data. You don't have to sit around and monitor all the systems. You can just set it all up and run it as end of day data system, but it will trigger during the day and it will run through the day by triggering only at the end of the day to exit as market on close. No profit targets, no stop loss, just get in and get out the same day. So that's where the pros and cons lie for that same exact system. But otherwise, let me show you what it does. But the most important part is it was non-correlated system. Okay, that's a hint. Now here's the day trading system. It's not too complicated, but it has a little bit more to make sure that we get into the right stocks. So I am processing the S&P 900 stocks. If some people don't know what the S&P 900 stocks universe is, it's basically first 500 stocks, which is S&P 500. Everyone knows about that one. Then it's followed by the mid cap S&P 400 mid cap. So combined together, they become S&P 900. Okay, so that's the universe of stocks I'm trading. So I want to trade S&P 500 stocks and S&P 900 stocks. As a matter of fact, this particular system works even for S&P 500, but it just generates a little bit more kick with S&P 900. So I'm going to be using that. I'm going to be entering onto it to 10 stocks at any point in time, and that's it. So I'm not going to get into a lot of stocks, not like hundreds of stocks, not only 10 at a time. So because of this, I will need to sift through this universe and say, okay, give me only the stocks which are liquid. So 1 million shares per day or more. Actually, I average, not even per day, but average per day over the last 50 days. And I want to make sure that I go into the stocks which are at least participated with somewhat participated by institutions. So that's why I want to go into the $5 or more stocks. I tried with $10, with $20, I tried with $1. It basically works in all cases, it's just not as good. So I'm giving you basically the best right now, but it's not the best because I'm not trying to over optimize it, but I'm just trying to make sure that you get a little bit better returns in this case. Now, I want to make sure that it's not too crazy as far as volatility is concerned for those stocks. So I'm going to go with the ATR percent. This is a little bit harder. In my software, I can calculate the ATR percent. I don't know if you can figure it out with your TradingView or something like that, but basically it's the measurement of volatility, which tells me that, oh, I don't want to get too wild stocks. So the ATR percentage will only vary between 2 and 12%. So it's a pretty, I mean, it's not completely docile stock, but it's not wild stock either. And then I want to make sure that the stock that my candidate has to be in an uptrend, because I don't want to get into something which is downtrending. The likelihood for the stock to actually not recover is very slim. So I'm going to be looking at the stocks which are uptrending, and I measure it with the stock has to be trading above the 250-day exponential moving average, which is my kind of like a guide in here. Then I'm going to have the stocks which are moving. If they're not moving, I really don't need to be in them, because it's a day trading system. It only gets in during the day and gets out during the same day. So I don't have any luxury of all these prolonged moves, overnight moves. So I want to make sure that it has the moves happening. So that's the reason why I go with ADX in here. And we're also looking for a down day. And it's a down day was measured by opening the closing price, where it went down at least 3%. So if it basically it can down 5%, 10%, 3.1% for that matter, like anything above 3% for the same day, we're good as far as the candidate list is concerned. But then obviously we can have lots of candidates. So I need to sift through these candidates and choose only the ones that I think will be the right candidates for me today. So what I'm doing is I'm ranking them up, I'm sorting them up by the historical volatility of 100 days. So this way I will get into the most volatile stocks out of my candidate list. Because again, if it's not a volatile stocks, I already tested it out. It will work, but it's not as good as what I'm giving you. And then the most important part is that we need to make sure that we are still not entering indiscriminatory. We will enter only if this stock will go down by at least, not at least, but by 3% exactly to trigger our limit price. And that's 3% from the previous closing price. Because how do we exit? Well, we exit only one and only exit that we have, market on close. So as soon as we get triggered, we will exit. It means that the orders are entered ahead of time before the market opens. We enter all the orders for all 10 candidates, and we just cross our fingers that they trigger, right? That's pretty much what it is. So some may trigger, some may not trigger. The orders are only good for one day, and at the end of the day, as soon as the market closed, the orders is kaput. They're done. So here's the end result of this system. As I said, it's not blazing hot system, but what's good about it, it works in all kinds of different market conditions. Let me show you again that it, as you can see, it actually has only the current year is the negative year, but all the other years turned out to be positive. Again, it doesn't mean that it was positive on month-to-month basis, but it was positive on a yearly basis. Also, in the monthly basis, you can see that sometimes it can have very nice returns, sometimes it can have very bad returns, like the 2022 drop in June. Whatever happened in 2022 June, it just looks like that lots of stocks just went down at the same time. So we caught what is called the falling knife. And but at the same time, it still was positive for the year, right? That same year, and it did not perform the benchmark much. But I personally don't care, because the whole purpose of the system is to trade it non-correlated to my other long-term trend following systems, or my short-term trend following systems, or my combination of all the systems that I have. In this case, I will have just short-term trend following system. So what's the pros to trade this system? Well, the broker can give you extra margin, which means that instead of, like, when you can borrow money. Moreover, when you borrow money with this type of system, you don't even pay for the borrowed money, because the broker actually encourages you to day trade, surprisingly, right? So they give you free money on top of what you can borrow by normal means, and obviously it's a double-edged sword, because if you borrow too much, then you can actually hurt too much too. But at the same time, we don't hold anything overnight, and it works in all kinds of market conditions. What's the cons though? Well, it's a pretty volatile, right? I mean, you saw that in 2022 it just dropped. In 1 month it just dropped 11%, right? So it's possible that it can exhibit this type of behavior in the future too. I mean, you never know. As you saw, it's kind of like a wild ride. It's just less predictable. And because of this, I don't want to allocate too much to it, but in this particular case, I will just show you what will happen if I allocate a lot to it. By a lot, I mean I will allocate as much to it as to my overnight system. In reality, I could have allocated even more to this system, because, as I said, the broker gives you 4 times leverage. for overnight. While let's say this system, my momentum system has 100% allocation, I gave 100% to this system as well, and as you can see, my Kager went up through the roof, right? As compared to what it was before, and at the same time, my drawdowns went down. Why? Because of the non-correlation. It propped me up when the other system was down. As you recall, the other system had 34% drawdown, maximum drawdown. Now it only has 29%, so 5% saved. And by using this approach, I can obviously go into much more combinations and have different systems. Here's the yearly, here's monthly. Even the same 2022, as you recall, June is bad, but not 11% bad. Why? Because my other system was probably making some money, so it was saving me from this particular system, from the day trading system. So, in essence, oh, here we go. One more thing I forgot. The correlation matrix is also a very good thing to see that these systems are not as correlated to each other. So, as you can see, that this system, the Russell 1000 momentum versus the S&P 500 median version 900, sorry, is only 14% correlation, and on top of it, to the suite, it has its own non-correlation as well. So it just in this particular suite, because it's only two systems, obviously my momentum has the biggest correlation to it because it basically drives my main curve, but the other system helps me out because it's not as correlated. Okay. Now, here's the conclusion. Adding more systems together does help. That is why you can't just look at the system in isolation and say, hey, this is a good system, let me just trade it. In reality, you really need to trade only the systems which help you in your suite. If they don't help you in your suite, as an example, if I would have added the system and instead of 34% maximum drawdown, it would have been something like 40% drawdown, then I would say, nope, I cannot add the system. From this perspective, you really need to work in the suite of systems approach. You really need to put it together. You can't just do one thing at a time, okay? And because of this type of approach, you can enhance your upside while reducing the downside, meaning that the drawdowns, you can reduce the drawdowns a lot by improving your upside as well, which will ultimately help you to actually trade it in life environment much easier. Because otherwise, if you are relying on one or two systems only, you will have a lot of angst to actually put on the trade, because you will hurt more often than not, and you need to have much more in your portfolio of systems. So the portfolio has to be wide enough. As an example, I trade 55 systems. It doesn't mean that you have to trade as many, but it's always better to trade multiple systems. Which leads me to this. If you are curious and want to learn more how it's done, how it's possible to actually do it, please send me the email, and as a matter of fact, it is going to be even better if you book the call. Book the call so you can talk directly to me and see if it actually helps you in your situation. Warning: not everyone is qualified for for our mentoring. If you want to join our mentoring, but there's no obligation to join the mentoring if you want to book the call, and then we just want to find out if it actually makes sense for you to even pursue this particular route. Otherwise, stay in touch and visit our site for more information, tradingsystems.com, and look for more videos from us. See you. Bye.